The two realities. You walk into a grand marble lobby. To your left, there is a line of people waiting for a teller. To your right, there is a frosted glass door leading to a quiet office with leather chairs and high-end espresso. Most people believe the difference between those two rooms is simply the amount of money in the bank accounts, but that is the first lie the financial system tells you. In reality, the difference is not the money. It is the relationship. To a bank, you are either a source of fee income or a strategic partner. You are either the fuel for their engine or you are the driver.
Today, we are stripping away the jargon and the marketing brochures. We are looking at the hidden mechanisms of the banking industry to show you exactly how the rules of the game change as you move from $0 to $100 million. Following the every level format popularized by creators, we are exploring the brutal reality of the banking hierarchy. We don't do hype or stock picks here. We focus on the architecture of wealth. Because until you understand how the bank views you, you are playing a game where the house always wins.
Level 1, the profit center, $0 to $10,000. At level 1, money is not a tool, it is a source of constant stress. In the banking world, this is known as the retail or consumer tier, but insiders have a different name for it, the profit center. When you have less than $10,000, you are often a negative margin customer for the bank's traditional services, so they have to find other ways to make you profitable. This is where the defensive pessimism of the banking system kicks in. Imagine you were at the ATM. You have $40 in your account, and you need $50 for groceries. The bank allows the transaction, but they don't do it as a favor. They do it so they can trigger a $35 overdraft fee. At this level, you are hit with monthly service charges simply for the privilege of letting the bank use your money for their own investments. As Money Tom often explains, this is the stage where you are paying tuition in the form of overdraft fees and bad loans. The bank's algorithm sees you as a high-risk entity. Because your balance is low and your cash flow is inconsistent, they charge you the highest possible interest rates. Your credit card isn't a bridge to wealth, it's a high-interest trap with a 24.99% APR. When you ask for a personal loan, the mortgage lender or loan officer doesn't look at your potential, they look at a generic credit score. If that score is low, you are treated with suspicion. You are the survivalist, and at this level, the bank is not your friend. It is a toll booth on your path to survival. The psychological gap of level 1. Why does it feel so hard to escape level 1? Because of a concept called loss aversion. Your brain is wired to notice the $35 fee more than the 0.001% interest you're earning. You stop looking at your bank app because the numbers cause physical pain. This is the salary trap, the belief that a small raise will fix the problem, when in reality, the bank is designed to capture that extra income through fees and high-interest debt. To move to the next level, you have to adopt minimalist money rules and treat debt like the bear trap it actually is. Level 2, the middle class, $10,000 to $250,000. You've saved your first $10,000. You've moved into what the industry calls the mass market or premier tier. At this level, the bank stops trying to fee you to death and starts trying to sell you to death. You are now a consumer, and your value to the bank is your ability to take on standardized debt. This is the home of the high-income poverty trap. You likely have a good job and a consistent paycheck, which makes you the perfect candidate for a 30-year mortgage or a $60,000 car loan. Banks at this level treat you with efficient indifference. You can call a customer service line and talk to a human, but that human is following a script. They want to put you into generic products. Think about your savings account. The bank is likely paying you 0.5% interest, while they take your deposits and lend them out to the level 4 investors at 7%. You are providing the liquidity that runs their system, but you are receiving none of the rewards. At this level, you are often rich on paper, but broke in reality. You have the fake rich markers, the leased BMW and the suburban home, but your net worth is flat because your lifestyle inflation is rising as fast as your salary. At level 2, the bank views you as a mortgage unit.
They want you to stay in debt for 30 years because that predictable interest payment is the boring money that stabilizes their balance sheet. To the bank, you are a reliable, slow-moving asset. You are safe, you are consistent, and you are precisely where they want you to stay.
Level 3, the millionaire next door, $250,000 to $5 million. Everything changes at the $250,000 mark. This is the pivot point. In the banking world, this is the transition from retail banking to wealth management. You are no longer a consumer, you are now a client. When you walk into the bank now, the teller might recognize your name. You receive an invitation to the private client wing. You get a dedicated relationship manager. But don't be fooled, the bank still has an agenda. At this stage, their goal is to capture your assets under management, AUM. They want to manage your boring index funds and charging you a 1% fee to do what you could do yourself with a lazy investor's cheat sheet. However, the rules of the game are starting to bend in your favor. Because you have quiet wealth, you are now a low-risk entity. When you need a loan, you don't go to the generic loan officer. You talk to your relationship manager. They can override certain criteria. They can offer you a relationship discount on your mortgage. The bank starts introducing you to accredited investor opportunities. This is the velvet rope opening. You get access to private real estate deals or hedge funds that the level 2 consumer never sees. At this level, your money starts working harder than you do. As Peter explains, $500,000 is the point where wealth gets unfair because the bank starts helping you preserve what you have rather than trying to take a piece of it. The neuroscience of level 3. Psychologically, this is the dead calm phase. You've stopped checking the prices of groceries, but you still drive a $30,000 Toyota because you understand the science of quiet wealth. You are no longer trying to look rich. You are focused on mindset levels, shifting from how do I spend this to how do I use this to buy more time. The bank notices this shift. They see that you aren't impulsive and they reward that discipline with better terms and bespoke advice. Level 4, the 1%, $5 million to $30 million. At $5 million, you leave the wealth management floor and move into the private banking suite. This is the world of high net worth HNW individuals. At this level, the bank stops selling to you and starts hunting for you. You are a strategic partner. This is where you gain access to the most powerful tool in the banking arsenal, the Lombard loan. Imagine you have $10 million in an S&P 500 index fund, VOO or SPY. You want to buy a $2 million vacation home. A level 2 person would have to sell their stocks, pay capital gains tax, and use the cash. A level 4 person doesn't sell anything. The private bank gives them a line of credit at a very low interest rate using their $10 million portfolio as collateral. You are now borrowing against your assets. You keep your stocks, you continue to earn dividends, and you use the bank's money to buy your dream house. This is how the Wall Street elites stay rich. They never sell, they only borrow. At level 4, you are assigned a tax architect and a legal strategist. The bank helps you set up trusts and LLCs to shield your wealth from the IRS agent hunting billionaires. You are no longer just a person with a bank account, you are a financial institution in your own right. The bank provides institutional execution, handling international wires, complex currency hedges, and private equity placements with a single phone call. You are standing in the room that insiders recognize immediately. Level 5, legacy wealth, 100 million plus. This is the final level. In the industry, this is ultra high net worth or UNHW territory. At $100 million, you don't just have a bank account, you have a family office. You have moved beyond private banking into institutional influence. At this level, you are so wealthy that the bank views you as a peer. You might fund the bank's own deals. You might provide private credit to corporations. As Ronnie Finance explains, this is where you move from analyst to architect. You aren't just climbing the ladder anymore, you are the one who built it. The bank's role at level 5 is concierge and custodian. They manage your generational dynasty. They help you set up foundations and philanthropic trusts to ensure your name stays on buildings for the next 100 years.
Your Sunday routine isn't about budgeting, it's about global asset allocation and legacy strategy.
But there is a brutal reality at level 5 that nobody warns you about. You are now a target. Every lawsuit, every black market actor, and every sovereign exit strategy involves you. The bank's primary job is no longer to make you money. It is to protect the fortress. You have reached the apex of power, but you are also under the most institutional surveillance. The Finance Simplified conclusion. So why did we walk through all 5 levels? Because wealth is a lagging indicator of your habits. You might be at level 1 today, feeling the weight of those overdraft fees. But the money cheat sheet to reach level 5 is the same for everyone. Treat debt like a trap. Avoid the high-income poverty trap. Automate a boring investment strategy. Build quiet wealth that nobody knows about. The bank's treatment of you is simply a reflection of your mindset level. When you stop acting like a consumer and start acting like a strategic partner, the financial system begins to work for you instead of against you. Which level of banking service was the most shocking to you? Was it the level 1 fees or the level 4 Lombard loans? Let me know in the comments. And if you're ready to stop being a profit center for the bank and start building a legacy strategy, visit our community tab for our latest poll. Subscribe to Finance Simplified to join the community that speaks the language of money.